It's an interesting point, this, because I think, again, it varies across different jurisdictions. So if we look at the UK, by example, I think people forget a little bit that back at the height of the crisis, I think the top three lenders accounted for some 60-odd% of all lending out of the UK. So clearly that created mammoth problems in terms of liquidity and diversity in our market. I think going forward, as Anthony said, there's now much greater diversity, increased liquidity, which I can think only is a good thing in the marketplace. There are more funds, but there are also more non-bank lenders. GE is a good example of that with a big balance sheet, and there are plenty others out there. The sector in this area, though, is still relatively small. It's growing, and I think it will continue to grow. But that's not to say that the clearers and some of the traditional banks, and across Europe, a number of the traditional banks are coming back. They're starting to sort their problems out, and they're working through their books. Parking that aside, they're now looking at new business, and they are returning. So I don't think it's a question of the gap just totally being filled with non-bank lenders, but I do think that will continue. Interestingly, on a number of the debt funds, there have been some smaller, what I would call smaller debt funds, 500 million odd, that have started up. But I think they found it quite hard to place the capital they've raised into suitable transactions to getting the right returns. So I think there's a preference still for a lot of borrowers to come back to the flexibility of a balance sheet lender. So I think on the whole, we will continue to see more diversity, more liquidity throughout the market. I think there will be more operators in that space. I think the real question of interest is how long some of those particular lenders will be out there active, or whether they retract over the next few years as pricing becomes extremely tight, depending on their source of capital.
And this presumably is because they've gone out, raised capital on a basis of a certain level of return and certain level of risk, and that's no longer available in the market?
Yeah, I think that's to a point. You've got investors that want a certain return. They also want their capital invested. So for the debt funds, they need to move ahead with that. I think as pricing continues to come in, and I think, look, it has really moved in over the last 3 months. And if I look at certain jurisdictions, the likes of Ireland, generally you would get a 50 basis point increase on any margin to a typical comparable UK transaction. Now that's just eroding completely. And then when we look at Spain, the market there is becoming much more competitive as a number of lenders are moving into that market. In Germany, traditionally, you've always got German lenders that are active on the smaller deals, but then even on some of the larger deals, pricing's become tighter. So I think, yes, it depends on the source of capital, but generally the retail deposits are where you're going to get that cheaper pricing. But still, there's a discount in the market. The fan brief banks have also come back and seem to be doing slightly higher gearing.